The three models, obviously from a Sharia perspective, are, they're equally as acceptable in the sense that they comply with Sharia norms. They are part of what we call the uqud musammat, or the nominal contracts, which we've used as building blocks for the construction of modern financial products and services. But each one has its own, rationale. And in the context of the United States and our tax regime here and the regulatory situation, the Murabaha model is one which is almost, can be recognized almost immediately as one that really does not fit, in the sense that the Murabaha model is based on an obligation. It creates an obligation and therefore begins to resemble debt in many ways. And that, as such, it is not, it cannot be used in a secondary market situation. I mentioned earlier that one of the principles of Islamic finance is that we do not traffic in the debt of others. An obligation is, or a debt is a responsibility of the individual, and it's not something that an outsider can step into unless they're invited to. And of course, the Sharia provides for that as well. But to trade in the obligations of another, or to speculate on whether or not they're going to pay, and all of those things that are used in modern finance, all of that's rejected, marfud. And so that renders the Murabaha contract very difficult and probably unacceptable for use in the United States, because you need to establish economies of scale, and you just cannot get those that kind of scale out of a Murabaha contract, because you cannot trade it on the secondary market. Even though, wallahu alam, why this should be the case, but there are some people in the United States who attempt to do so, and who then attempt to represent it as Sharia compliant when it's not. The other model is the Ijara Muntahiyat Tamlik, or any form of Ijara. Again, from a Sharia perspective, Ijara is one of the tools, the uqud musamma, one of the nominal contracts, which is widely accepted and used in financial transactions around the world. And yet, here in the United States, it may not be the ideal contract, especially when stacked up or when compared against the Musharaka model. Because the Musharaka model really provides for a number of protections to the consumer, which are not necessarily there in the Ijara Muntahiyat Tamlik. And for that reason, our Sharia board, and for business considerations as well, we favored the use of the Musharaka model for guidance residential. Now, the importance of an independent Sharia board cannot be overemphasized. Yet, when people talk about Islamic finance, as I explained earlier, there are two components to that. One is the finance component, and one is the Islamic component. And generally speaking, business people and bankers, asset managers, index providers, they don't know a whole lot about Sharia, even if they're Muslims. Because Sharia obviously is a vast subject, but in particular the fiqh al-mu'amalat, or that branch of Sharia which deals with contracts, business, is a highly specialized area and one in which a great deal of innovation is taking place, and it's you need to have people who understand that in order to work with effectively, to work with lawyers and business people to develop financial solutions. So a Sharia board is essentially the guarantee for the public that the product or services offered by the provider are what they say they are. In other words, they are authentic Sharia compliant products, and that will yield halal results if they're an investment product, and will transact in a halal manner if there are other financial operations. So that's why you need to have, that's why any Islamic product provider, in order to have legitimacy in the marketplace, needs to have this. Moreover, the AOFI, the Auditing and Accounting Organization for Islamic Financial Institutions, has established in one of its standards for the industry that any financial organization claiming to be Islamic must maintain a Sharia board of at least 3 scholars in order to guarantee its Islamic authenticity. Not only to work through the development stage of the product, but also to monitor the operations once the product has been launched and brought to market. The other thing, I think, has to do with the matter of my having worked on some of the other products which are available for home financing. It's true, I have worked on several of them in the United States and outside of the United States. Some of those businesses are still in business. Some of them are not. But the only product which I actually actively supervise is the guidance residential product. Otherwise, you can see my signature here and there. But that was a part of, that was offered at the end of the development process, so that the product which was developed met with my approval and the approval of my colleagues on the various Sharia boards on which I've served in the past and continue to serve in some cases. But the point is that the only residential operation Sharia compliant here in the United States that I actively supervise, work with, understand on a day-to-day basis is the guidance residential product.
Thank you, Shaykh Yusuf. A few questions that I'll answer. Someone that is asking if they've paid off their house and they want to get financing with us, how would that work? Would it be the same? And the answer is yes, it would be the same if you had paid off your house, or if someone has a mortgage with another banking institution. You can come over to guidance. We will help you pay off the other conventional mortgage and get you into a Sharia compliant partnership with us, inshallah. The question for you, Shaykh Yusuf, people have asked the same question in different ways. Where does guidance get their funds from, and is that relevant for the Sharia compliancy of the program? Where does guidance get their funds from? I've heard that they get their funds from a bank. Things along those lines. So really, when it's about the funds.
Yeah, okay. Well, that was a part of the answer of an earlier question. At the present time, investors in the guidance residential works with one investor at the present time. That investor is a government agency which is empowered by Congress to lend liquidity to the home finance market by buying the contracts and investing, effectively investing in home finance originators like guidance. So guidance works with Freddie Mac, Freddie Mae. Which one is it? Freddie Mae? Freddie Mac.
Freddie Mac.
Freddie Mac. And as I explained, Freddie Mac is not a bank. It is not allowed by the government to lend money in any way. Instead, it is an investor. It's essentially a brokerage. They buy investments and they sell them to other investors. And thereby they generate cash for the or liquidity for the home finance market across the United States. And that's the government organization with which Guidance Residential participates. We work with them on the basis of a very specialized contract. Amjad explained the story of our first meetings with them. In fact, after the first meeting, they said, we could work with you if you did X, Y, Z, and we went back to the drawing board and we did X, Y, Z, and then we went back to them and they accepted the working model, and since that time it has worked perfectly well.